everybody, welcome back to the Wealth Advisory's Top 10 Stocks. We're on to March 2023, 3 months into the new year. Amazing, crazy. I still remember, like Y2K and stuff, so the fact that it's 2023 just blows my mind. But anyway, here we are, and we're here for the Top 10. Last month was a rough month for the Top 10, for the markets. Our goal is to beat the markets. We did not. We typically do. So, I'm not gonna get disappointed. I am a little bit disappointed, but I'm not gonna get upset about it. Sometimes you win, sometimes you lose. The markets honestly didn't perform that great last month either. They started the month off on, a high note after having a great January. But then we got jobs numbers came in hot, inflation numbers came in hot. And while most people are going to be, would think that that's good news, like we're creating more jobs, unemployment is low, like people are able to spend more money on things. Basically, what this all means is that the Federal Reserve has more work to do. The Fed's going to be raising their interest rates higher. They're going to be keeping those rates higher for longer. And that means that it's going to be tougher for the market to grow. It's going to be tougher for stocks to grow. We just got out of basically almost 20 years zero interest rate policy. And now we're into a regular interest rate policy, and we need to see how these companies react now that money isn't free anymore. So like I said, rates are going to be higher for longer, and that's what all of the data points keep telling us. And that's sort of why the market did what it did last month and reverse course. We're looking at a possible peak rate of 6% for the Fed funds. Before all of these data points came out last month, we were looking at maybe a possible peak rate around 5% to 5.5%. So, our top rate is getting higher, and that means it's going to be more expensive to grow your business. Markets aren't pricing in rate cuts anymore for 2023. Last time I talked to you, we were looking at the fixed income markets, which I always say, like, these are the smartest guys in the room. Those are the guys I used to work with back when I was at Morgan Stanley, and they don't know, but they have a better feeling of what's going to happen in the market than us equity boneheads. And so, they're really smart guys, and they've been pricing in rate cuts by the end of the year, but now they are not. They're not pricing in rate cuts until at least 2024. They expect the Fed to get up potentially to a 6% top rate and then hold it there for a while. And really, but nobody knows exactly what's going to happen. Is the Fed going to, continue to hike? Are they going to hike by, 25 basis points or 1/4% each time? Or are they going to bring in like 0.5% hike? Are they going to stop once they hike it another 0.5%? Or are they going to go up to, 0.75%? Are they going to add a whole extra percent? That could be 4/4% hikes. That could be 2/4% hikes and 1/2% hike. So markets hate volatility is sort of what I'm getting at here, and or hate uncertainty, sorry, and uncertainty leads to volatility. So we're expecting volatility going forward, and that's sort of what we've been seeing for the past, couple of months, really. The markets go up, the markets go down, the markets go up, the markets go down. Just when you think we're into a new bull market, it reverses course and goes back down. Markets don't like uncertainty, and that's what's going on right now. They can take bad news. They obviously prefer good news, but when they don't know what to do, like they can't figure out what's going to happen, they bounce around. And that's sort of what we're seeing here. But we're undeterred, and we're back to see if we can beat the markets this month. I think that I've got a better lineup for the March stocks list. So, we'll see, hopefully, fingers crossed. I always tell people I'd rather be lucky than good any day of the week. Last month, we did not get lucky, but I think our luck's going to turn this month. We've got some good stocks. And just as usual, we're going to go through the first 5, and then we're going to cut it off for those of you who are watching on YouTube. I have paying subscribers that pay money to get access to this list, so it's not fair for me to give out all of the stocks for free, but I do want to give you a head start. So I'm going to give you the first 5, which is honestly a great start. In some months, obviously last month, you might not have been able to pay for a subscription with the first 5, but this month, hopefully you can pay for a subscription with the first 5. You've been able to in the past with just one of the picks. Sometimes you can pay for an entire year's subscription. So if you do want to join us, there's going to be a link in the description below the video. Go ahead, click it. I'll give you a really great deal to become a full member of the Wealth Advisory, and you'll get not only the top 10, but all of the other things that go along with the Wealth Advisory membership. So anyway, with that being said, let's get into the top 10 for March 2023. And our first stock is one that did not perform that well last month, but I think has the potential to turn around. It's Freeport McMoRan. Its ticker symbol is FCX. It's FCX. And Freeport is basically the biggest copper company out there. It's like got an $80 billion, give or take, market cap. It's a huge company. It brings a lot of copper out of the ground. And, our long-term thesis on this is basically that copper is the lifeblood of electricity. Every bit of electricity has to flow through copper wires. And if we're going to, continue to build out the renewable ecosystem, continue to build out more solar fields, more wind turbines, more electric vehicles, all of those things require lots and lots of copper. And if we're going to be relying on renewable energy so much, we're going to have to upgrade our electric grids. Our electric grids are made out of, guess what? Copper. Long term, that's our thesis for this. Short term, China is getting rolling again. It's sort of in fits and starts and things, but China is a big demand. China's a growth engine, and they demand a lot of copper. So we're thinking, short term, maybe China will help out with that. The stock is trading above its 200-day moving average, which not a lot of stocks in our portfolio are right now. So it has some potential for sort of momentum picking up behind it. It's definitely that's a long-term moving average, but staying above it is a very good thing. That's a positive thing. Copper prices are really down. They're down near a short-term floor, and they could easily hit that floor and reverse back up this month. So, I think everybody should own Freeport McMoRan for the long term. So we're going to put it in here as our number 10 stock in the hopes that it turns around this month and gives us a little bit better performance. And that's our number 10 pick. So moving on, next up we've got a bank. What? A bank? Like when we're heading for a recession, but people run out of money, right? I know you're thinking that, right? And yes, that's true. And banks definitely sometimes have trouble collecting on loans and things like that when recessions come through. But banks also do really well in higher rate environments, and that's what we're in right now, because basically they can charge higher rates on the loans that they give than they're going to pay on the accounts that they let you have. So you're going to loan them money by keeping your money in one of their bank accounts. Well, they might give you like a 3 or a 4% interest rate on a savings account, but they're going to charge you like a 5 or a 6 or a 7% rate to borrow money. So they make money off that spread between what they pay and what they receive. And in a high interest rate environment, they receive a lot more. Bank of America beat the markets last month also, so it has some momentum behind it, and I think that momentum can keep carrying. It also has a really tight balance sheet, so that's one of the reasons that I'm not too worried about it getting hit in a recession. Is this isn't the Bank of America that got slammed back in 2008. These aren't the same banks that got slammed in 2008 because of all of the requirements that they've had to meet with these Fed stress tests and things. So I think it's a really good long-term hold even if the economy slides into recession. And I think this month it's got the chance to continue to outperform the markets. So we're putting it in as our number 2 stock. It's Bank of America, ticker symbol BAC. BAC. And it's going to be our number 9 stock. So next up, we've got our number 8 stock. Obviously, because that's what comes before 9, or after 9 in this case when we're going backwards. And it is another stock that didn't perform too well last month, kind of like Freeport McMoRan. It's another stock that provides commodities, and it is Albemarle Corporation. And so Albemarle is our favorite lithium mining company. It's one of the biggest lithium mining companies in the world. It sort of trades back and forth with this other company, SQM, as the number 1 lithium producer in the world. Its ticker symbol is ALB. It's ALB for Albemarle. Like I said, it didn't do great last month, but it has the potential to turn it around, kind of like Freeport. Long term, it's a play on the growth of EVs and the need for lithium batteries in the renewable energy economy that we're transitioning into. Short term, it's sort of a play on the Chinese economy. Another short-term thing is actually something that came up just this weekend. A report came out that the Chinese are going to have to shut down one of their biggest lithium processing facilities because it was investigated, and it turns out that it's not it's not above board. It's not, they're not doing things the way that they should be done. So they're going to have to shut it down, to retool things, to figure out how they can fix this. And that's going to take 10% of the lithium supply, the global lithium supply, off the market. And we know what happens when demand remains the same and supply drops is prices go up. So that's going to bode well for all the other lithium companies out there, Albemarle included. Also, I've been telling you guys for a while that I think stagflation is something that we're going to be seeing in the future, at least for the next couple of years. We're going to have slow growth and we're going to have high inflation. And that's actually a good thing for commodities and energy, and lithium is sort of a play on both sectors. It's a commodity and it's the future of energy. So for our number 8 pick, we're going to go with Albemarle, and we're going to see what lithium can do this month. All right, moving on to number 7, we have one of my favorite types of stocks, one of the Wealth Advisory's favorite types of stocks. It's a real estate investment trust called Equity Lifestyle Properties. It's got momentum behind it. It's trading above its short-term moving averages. It's got performance going for it. It beat the markets last month. And it's got income, which we love because it pays these steady and growing dividends. Equity Lifestyle Properties is a real estate investment trust that owns manufactured homes and manufactured home communities, also known as trailer parks. And look, they're a really solid long-term investment. You're talking about a good 20% ROI. That's one of the reasons that Warren Buffett loves them. One of his biggest investments in private companies are companies that sell, finance, and insure manufactured homes. And they're relatively recession resistant, because manufactured homes are cheaper. So if people need to save money, if people need to sort of downsize their expenses, moving to a manufactured home or a manufactured home community is one option they have. The company also owns RV parks, right? And so people are still vacationing, people still want to go on vacations, but if we do go into a recession, people are going to be wanting to conserve their money, right? And one way you can do that is by taking domestic vacations, not flying out to that all-inclusive resort in the Caribbean, but maybe getting your RV and renting an RV and taking it, down to the shore, down to the beach, down south, taking it somewhere out to the mountains. That bodes well for Equity Lifestyle Properties, since they also own the RV parks that rent out those lots to people when they go on vacation. So we really like it long term, and I think in the short term, it's got the momentum, it's got the performance, and it's got that income. So I think it could be a really good play for March, and that's why we're making it our number 7 pick. And before I forget, the ticker symbol is ELS. I won't even bother writing it since they did that for me. All right, so now moving on to the last one in our first 5. It's another real estate investment trust. We love the REITs here at the Wealth Advisory. Real estate investment trust, basically, the reason that we love them so much is that they have to pay income to shareholders. In order to maintain the special tax treatment that they get from the government for being a REIT, they have to pay at least 90% of their pre-tax income out to shareholders. And so we love that. That means that, when their revenue grows, our income payments grow. This one is an apartment real estate investment trust, which means they own apartments, obviously. And it owns and operates these apartments in what I'm calling the Battery Belt, right? And so the Battery Belt is basically this area in the Midwest, especially around Ohio, where it's getting lots of bids for new factories for the green economy. So we're talking about factories that are going to be building batteries, solar panels, EVs, inputs for wind turbines, all of that stuff. And a lot of these companies are promising that they're going to move into the Ohio, sort of like the old Rust Belt region where all of those manufacturing companies used to be. And they're going to start building these things for the renewable economy. That is going to lead to a need for skilled workers in those areas. Lots more people coming into those areas means we're going to need more housing for all of those people. And IRT, Independence Realty Trust, has one of the biggest presences in this market. So I think it's going to benefit a lot from it. And that's our long-term thesis on it. And since it pays income, it's got a little bit of momentum behind it. It's trading above some short-term moving averages, and it performed a little bit better than the markets last month. So we're going to see if that can continue this month and make it our number 6 pick. Independence Realty Trust, ticker symbol, before I forget, is IRT, Independence Realty Trust. And so that's our sixth pick, which means we're going to do a little recap, which means we're going to do a little recap, and then we're going to leave you YouTubers and get into the top five. Like I said, if you want to get the top five, just click the link in the description below the video. There's a discounted offer for you. I would love to have you as a full member. Trust me, it's well worth it. I know I'm a little bit biased because it is my investment advisory service, but it is really well worth it. We've been helping, hundreds, I won't say hundreds, tens of thousands of, 20s of thousands of, even 30s of thousands of investors beat the markets for years, and we really love for you to join us. So now that being said, let's go ahead and I'm going to give you the recap, and then I'm going to let you go get about your day. And so our number 10 pick is our favorite copper company, Freeport-McMoRan, ticker symbol FCX. We think that, long term, we know that we're going to need a lot more copper. Something by like 2030 or 2035, we're expected to basically need an entire another Freeport-McMoRan worth of copper. And it took like 80 years to grow Freeport-McMoRan to the size it is. So I can't see that happening in the next 10 years again. So that's going to be big for copper prices. Demand is going to grow, supply is not going to grow fast enough, prices are going to go up. Freeport should benefit. Next up on our list this month is Bank of America. It's our favorite bank. It's got a rock solid balance sheet. It pays income. It's going to make extra money off of its loans during the high interest rate environment, and it's relatively well insulated if we do go into a recession. Number 8 this month is Albemarle Corporation. It's the first or second biggest lithium producer in the world, depending on what day you check. Its ticker symbol is ALB. And we just love lithium long term, and in the short term, we think that the situation in China could add a little bit of momentum to the lithium stocks outside of that situation. Coming in at number 7, Equity Lifestyle Properties, real estate investment trust that has to pay us 90% of its pre-tax income. It owns those mobile home communities, it owns RV parks, and it should do well even if we go into a recession. It was also outperforming the market last month, so we've got that behind us too. And coming in at number 6, rounding out our first 5 for March, is another REIT, Independence Realty Trust, IRT. This one owns all of those apartments in the Battery Belt. This new area. It used to be the Rust Belt, but now the factories aren't rusting. They're going to be pumping out batteries instead. And I think it's going to house a lot of the workers that are going to fill the roles at these new factories. So there you have it. Our first 5 for the month of March. I hope you enjoyed watching, those of you on YouTube, and I hope you'll join us next month. I really hope you'll actually join us as members, but if you don't worry. I'll keep putting out these first 5 for you as long as you want to watch. All I ask is that you give me a thumbs up on the video and subscribe to our channel. All right? I'll see you guys next month. Thanks a lot for joining us.